Now, without further delay, I would like to introduce our wonderful speaker for tonight, Jackson Lai. Jackson is a tax partner at BDO and helps companies grow and better realize the impact of their intellectual properties and development work in the technology sector. His mission is to promote R&D and make it easier to become an integral part of companies and, by extension, our economy. Jackson received his PhD in electrical and computer engineering from University of Waterloo. He has 15 years of experience in product development for biomedical devices, life sciences equipment, IT infrastructure, and consumer electronics. He now advises companies on their R&D efforts, refining best practices, identifying impactful innovations, and navigating through funding opportunities and tax relief strategies. Jackson, it is an absolute pleasure having you here to facilitate this workshop, and I welcome you to begin.
Thank you very much for the introduction. I really appreciate it. While I set up the screen, let me just give me 1 second. Sounds like we have a great turnout over here. It's always exciting to be able to deliver the content. By the way, just making sure, are we good in terms of screen? Good. Okay, thank you. Just a little bit IT checkup. I'm always very excited to be able to have a chance to speak to a wide variety of audience and also hear about your specific comments and feedback and questions. I do this talk quite a lot, so feel free to ping me any specific questions. And throughout the talk, I would talk a lot about different funding options and different programs that are available with a bit of a technology angle to that. Now, I'll pause in various parts of the meeting, and I think feel free to pop in your questions in the chat, and I'll try to address them. So if I don't get a chance to address to it towards the very end, obviously we also have a Q&A period that we can go into more elaborate questions. That is a overly pretty picture for myself. I don't quite look like that on a general day-to-day basis. Try to tease myself a little bit here. To resonate what the earlier introduction, an engineer myself. So I've been throughout my career, I've been engaged in various different types of innovation and research. So I understand the challenges and the pain and doing research and innovation, especially how time consuming and how expensive they could be. So I have a very passionate aspects of my work to try to help companies to leverage their expertise, to leverage their technology, and find good funding home for them to keep your journey in terms of innovation going. So what I'm going to talk about today is the non-dilutive funding, especially in the Canadian landscape. Before that, maybe I'll just be philosophical for a quick second. I know I'm assuming there's a lot of you in the conversation today are leaders and entrepreneurs yourself. So here's the question: like, what is really keeping you up at night as a leader, or as a company owner, or as an entrepreneur? I'll pause for a second. Maybe I'll let you reflect on that a bit. I cheat, so I list out a bunch of things that I would imagine that would be on the top of your mind on a day-to-day basis. I'll just list out a few, like best practices in your development, your potential competitors, sales, economy, cash flow, so on and so forth, so on and so on. I won't be able to help you solve all the problems on the list today, but hopefully I'll be able to help address some of the specific ones relating to finding the funding to help you ease the cash flow and help you to navigate the current fairly challenging, as I don't have to educate you on that in the inflation and the interest rate landscape of the challenging economy out there right now. So if I dive right into that, I often get asked of very different types of funding and financing options. So in a very broad stroke sense, I'll talk about equity financing, debt financing, which will lead me into talk about the non-dilutive funding. But now next to this, I'll also talk very quickly about valuation of your company and your work. And I'll explain why that is certainly important. In very general sense, equity financing refers to selling a portion of a company's equity or ownership in return of capital and money. Generally speaking, there's no obligation to repay, but you have to be mindful of the rate of return for the investors. On the other hand, debt financing is quote unquote a little bit more straightforward. It's like borrowing money and pay back with interest and principal. The beautiful thing about debt financing is that the company or the lender who is giving you that capital generally has no ownership or control over the business decisions. So you still maintain a lot of the control of your company. And on top of that, the interest paid can be tax deductible. Now, which is alluding to one of the earlier comments that I make in the today elevated interest rates, debt financing and the cost for maintaining a debt financing becoming increasingly challenging. So if you were to compare equity financing and debt financing, they're asking you as a company owner of your intellectual property for something in return of that capital. Non-dilutive funding, on the other hand, generally is referring to the government funding. You do not require to give up ownership, and quite often they're interest-free. So what gives? What exactly do you have to navigate that in order to gain that non-dilutive funding aspects? Now, before we dive into non-dilutive funding, I'll also take a quick detour to talk about valuation, as I said. Because why is valuation important? Generally speaking, valuation means you want to assign a value to your company or to your work for that matter. There are two aspects. Always think about as an entrepreneur, as a company owner yourself, what does it mean to have a valuation? And what does it mean to have too high or too low of a valuation? It's also beneficial for you to get an understanding of what the investor's perspective of it. So let's get through that very quickly, which I'll give you an example in the next slide. Then we'll dive right into why that matters a lot when you talk about non-dilutive funding. If you look at valuation, if you have a too low of a valuation, you might have been giving up too little consideration is received for the equity given up, right? So you are giving up a portion of equity for too little money. Obviously, from an investor's perspective, they're fine because they're giving you less money in order to get the same percentage. But the risk of doing so is the entrepreneur, the investor might not be motivated enough to maintain their skin in the game to keep funding your work. On the other hand, if you value your company too high, it sets a precedence for the future rounds of financing, which may or may not be achievable, especially when there's a lot of competition in equity out in the marketplace. On the investor's perspective, on the bottom right corner over here, if you have too much consideration is given up for equity received. So it's a balancing act to make sure that you get to the right amount. It's a quick example, which is the lead up to why I want to go through this valuation and a discussion here. It's about CCPC status. CCPC stands for Canadian Controlled Private Corporation. And the crux of it is to help your company and your ownership structure to maintain CCPC status, because CCPC status unlocks many of the interesting and very generous qualification for the different kinds of funding to be available to you as an entrepreneur. This is a very simplistic example. In this example, we have Sally and John, both owns a certain amount of shares of the company. And before then, they have a certain amount of share distribution, which is 60-40, which comes up to about 100%. Now they're interested in getting an investor. In this particular case, the investors is not in Canada. In this case, after the when you do the valuation and after you receive the funding and redistribute the number of shares, you would realize in this particular example, the foreign investors own over 51% of the company, which means the company, as the two owners between Sally and John, they have lost CCPC status. And again, then when I get to the SRED piece and the different grant funding piece, you'll understand why the CCPC status is important, aside from other taxation benefits you would gain from this. So the moral of this example is to allude you to the fact that not all funding opportunities are equal, and they all have slightly different aspects of impact in the operation, and also in from a grant and incentive perspective, how you would map that in the future for years to come. So non-dilutive funding, generally speaking, is the government funding aspects, as I was talking about earlier, is about finding both federal and provincial level initiatives, and also finding your company's work, and also the type of niche that you're in, and match it to the different initiatives the Canadian government are putting forth. This is obviously not an exhaustive list, but just a few of them that are quite topical in both federal and provincial. Of the different initiatives would be on technology development, which pertains to IRAB or SRED funding that you could get. Export, expanding your company's reach outside of the Canadian borders and bringing in foreign funding. Job creation, academic collaboration, and also onboarding freshly graduate students into the workforce of your company. And other special, or I shouldn't say special, but very seasonal, I would say, type of specific initiative the Canadian government like to put forth, such as different kinds of clean technology, agriculture, or manufacturing. The motivation of trying to describe it like that is I want to start painting the picture of the concept of the different buckets. This is one of the websites you can actually freely go on to check it out yourself. The point of this slide is to show you at any point in time, there could be over 200 different programs that are available for your company. Now, when I say they're being available, this website usually quite just lists out by means of filtering, list out all the programs that are available right now, which may or may not align with your company specific work or specific sector or specific industries. So building up a case of knowing your company on what type of funding or what type of niche that you're in would pave you a long way. So I also want to talk about grant and incentive. I've been mentioning the grant and incentive as if they're separate things. But so here's a bit of a definition. When we look at grants, what we quite typically refer to as direct funding is for the future work. Think about you put forth a proposal, and then a particular government agency would evaluate the proposal and give you a determination to tell you whether you have the money to fund you for the work that's going to happen in the future for the next, let's say, 12 to 36 months, for example. Grants are quite often competitions, meaning there are limited amount of funds that different organizations, different companies are competing for it. And oftentimes they have various application windows and deadlines scattered throughout the year. And from a taxation standpoint, many of these grants are repayable funding, may or may not involve interest, depending on the term sheets that you agreed with the different government organizations. So the little cartoon chart over there is to show when you have a grant perspective, you start out with the chunk of cash, then you gradually reduce that cash flow as you go along. On the right-hand side would be tax credits. So they work a little bit differently. So usually it's a spend first and claim later strategy, meaning you have to first find the funding to fund your work, go through that work, and towards some periodic funding, quite often it's aligned with your corporate tax return. Then you would submit a claim, and then you would get a tax credit of different forms of tax credits. There is, generally speaking, no competition for these funds, meaning that there is, from a government, federal, or provincial initiative, there is no set amount of funding. So you don't run out of money from that perspective. And from a cash flow perspective, you would see there is no periodic injection of cash. Then you would at some point when you file your corporate tax return and when the different government agency awards you with that claim, you would see a spike of cash flow. So I want to bring it to your attention. The difference between grant and incentive is about maintaining cash flow. So grants fund your future work. Tax credits recuperate some of that work that you have spent money on. So think about it as a rolling window. So by balancing your grants and tax credit strategy will help maintain a steady cash flow throughout the years. This is what I was referring to in terms of the bucket concept. Now, I was alluding to the fact that so there's technology development, there's hiring and training, there's business expansion operational, there's export market development, and there's market-specific activities. And when you look at the scope of work that your company involved with, start thinking about what activities and what costs incur fit into the different buckets that would really help you in identifying the different grants and incentives that is suitable for your company's needs. This is a very, very busy chart. The point of this is not to overwhelm with the different details. This is a particular case, that a hypothetical example that I built in using, in this case, about 10 different type of grants and incentives that could fund a company's work spanning over about 3 to 4 years of a period. The aspects of it is to identify and overlay your company development plan with a cash flow and deployment and commercial plan, so that you could, at different stages of a company trajectory, growth trajectory, you would identify the different grant and incentives that matches it. In many cases, it's somewhat like playing a video game, if I may. So you would have to work on specific type of grant to unlock the opportunity for another one. And then you would staircase it as you go along, as you progress in terms of expanding your company market share and also expanding your technology prowess. This is another concept I also want to get you to start thinking about, is to separate the different kind of risk. So this is a concept called the technology readiness level, the TRL scale, quite often used in the US military to identify different types of technology readiness. As your company grow, your risk profile at the earlier stage is mostly on the technology. Essentially, it's saying, is it possible for you to build that technology? As you transfer into fundamental research to prove with proof of concept that your idea is actually possible, you get into applied research territory, and then you get into the development and demonstration territory. As you grow, your technology risk starts to shrink, but your financial risk start to grow, because then it becomes about identifying the mass production's chain, identifying the different deployment strategies, and then your market strategy and your market risk starts to grow as well, because as you have proven this technology possible, assuming you're the first one to prove it, other companies would come into the game and start competing with you. So understanding your risk tolerance and your risk profile through this journey would also help you to present a case to the different government agency to say, please fund me on this aspect to help increases your chance of success in that marketplace. So I've talked about, generally speaking, on the bucket concept. So the next topic I want to dive in is the program called Scientific Research and Experimental Development. So in SRED, so it's a tax incentive program. It's one of the, well, I should say it's the largest Government of Canada program supporting research and development. It is a very generous program. Different forms of the SRED program existed ever since the 1930s. The program existed in Canada in this form right now since 2013. And there are many different other programs that are very similar to the SRED program in other countries, US, UK, and for example. But Canada, in terms of rate of returns, is one of the best. And I'll explain why. So in this slide, I want to highlight, so around 80% of Canadian support for R&D is delivered in the form of tax incentives. This is what I'm referring to it. The SRED program delivers, I believe that is a bit outdated number of $3 billion. In 2022, it's about almost $4 billion given out nationally speaking, with over $16,000 claimants annually through their corporate tax return. Many of the claims or the companies engaged in the SRED program are the first-time claimants, and they would have received various different types of correspondence of CRA. So let's talk about rate of return. So this is going back to the CCPC status that I was talking about. On the chart on the right-hand side, maybe before I dive into that, I should talk about For a corporate tax return, your SRED claim would go along with the corporate tax return, and there is a rolling deadline of eligibility of when you can file. So in the industry, customarily referred to as the 18-month drop dead deadline, meaning that there's 18 months after your company fiscal period for you to file for a SRED claim that go into your corporate tax return. As an example, if your company fiscal year end is calendar year, which is January to December, the work that happened between January and December of 2021, you would have until end of June of 2023 to file a SRED claim for it. So if you count from beginning of your fiscal period, you have close to about 30 months to consider filing for SRED. But obviously, the sooner you get into the act of filing the SRED return, the sooner you can potentially get your money. Now, the rate of return on the chart on the right-hand side that you're seeing over here refers to, in this case, 3 different categories of cost or cost incurred in that particular fiscal period that you can put forth a case to claim for. Salary, materials. Materials refers to materials like metal or PCB boards or whatever that may be, that are consumed or transformed in that fiscal period while conducting experiments. And contractors refer to typically third-party contractors that you engage. There are other special kind of contractors or third-party contributors that refers to universities or CRA qualified, reputable academic organizations that would participate in that. I'll talk about that in a little bit later. In this scenario, in a best case scenario, which is the CCPC scenario, for salaried employees, you could enjoy up to 66% of refundability. I'll just put it into context. Assuming, I'll put an example. Let's say you've been identified $100,000 worth of salary that are considered to be eligible costs in a SRED claim. We'll talk about eligibility in a bit. You could receive up to $66,000 back. So it's a very, very generous program. In exchange of that generosity, the definition of what considered to be eligible is fairly stringent. It's one of the most stringent nationally speaking, internationally speaking. As a comparison, in the US and also in UK, the salaried component, which you see the 66% component over there, it's about anywhere between 12 to 14%. So it's a drastic difference between the Canadian program and the program overseas, which also explains why the Canadian program has a lot more rigor in terms of considering and a lot more stringent requirements of considered to be eligible. The CCPC status I'm referring to, which is the only reason why that would unlock the 66%. If a company loses the CCPC scenario, CCPC status, the two implications of the two specific type of implications. First is the drop of the rate of return. You can see that it dropped from 66% to 26%. The second implication is you lose refundability. In the first case, when you have $66,000 a refund back, CRA obviously would take that money and apply it against any taxes owed, but the remaining of it would be essentially a check in the mail, cash revenue injected back into your company, which then speaks back to the cash flow consideration that I was referring to earlier. In a non-CCPC scenario, not only that it dropped to 26%, you lose refundability. So there is a huge implication in terms of the monetization of the tax credit and how it impacts your company's cash flow. The similar consideration is on materials and the contractor cost with a different rate and also different best and worst case scenarios. Another aspect in the last bullet point over there I want to allude to. SRED is one of the many different types of funding programs that are available for you, and you could stack them. Now, the government doesn't allow you to double dip, meaning that it doesn't allow you to fund the same dollar twice. But what you could do is to stagger the different programs on top of each other and assign the different costs of different activities to the different programs to maximize your combined rate of return for the different government organizations. So this is a very simple example. In this particular example, I'm only using two different vehicle of funding. One is a incentive, one is a grant. In this case, I'm assuming there's $100,000 of cash at the beginning of your journey, and then there's a $10,000 burn per quarter per quarter. In this scenario, all of them are salaried, and the company is CCPC, so it enjoys a refund and also 65%. Using this model, you see the cash flow. So you first have a straight line decline in your cash flow throughout a period. Then when you hit the first SRED claim, you get a cash injection, so on and so forth. You see the zigzag line. So by combining just two of the funding vehicles, you could extend your runway from 10 quarters all the way to 23 quarters. That's almost 2.5 time extension of the runway. So the program is very generous, very, very attractive for many different aspects of technology development that you may be engaged in. One of the questions that I got asked a lot is about the service standards by CRA when they receive a SRED claim. What that means is, and you filed a corporate tax return, how soon can you get that money? There's a qualifier to that. Not all the claims would be accepted as filed, meaning that there's no question of correspondence with CRA. At CRA published data in 2020 to 2021, roughly about 18% of the claim receive some kind of correspondence with CRA. What that refers to is when CRA comes and talk to you, want to clarify different aspects of the claim. This may or may not be an actual review / audit. It could be just an information acquisition process. But anytime there's a correspondence with CRA, you would expect there's additional delay to how soon you can access that money. But generally speaking, if you look at all the claims CRA accepted, the service standards they're trying to maintain is roughly about 60 days, meaning that about 2 months or so after you file, you get your money. The maximum, which is 180 days, about 6 months, is what CRA is committed to meet the maximum time. So anywhere between 60 on average to about 180 days, so 2 to 6 month period of time after you file. So that also speaks to the fact that you don't want to wait too late after your fiscal year end, and the sooner you file, the sooner you could potentially get your money. So let's get to the biggest question. What is eligible for SRED? So SRED, again, stands for Scientific Research and Experimental Development. What that really comes down to is there's a definition of what is SRED eligibility or SRED eligible work in the Income Tax Act. CRA take that Income Tax Act definition and overlay on top their own regulations and administrations of how to facilitate and determine what is considered to be eligible. Generally speaking, there are two types of ways that they look at it. Right now, they're really promoting the fact that about what is how and what the how and the why questions. First is why your company is engaging in this type of technology development. What is the motivation behind that, and how is it linked back to your company marketplace, and what are you trying to achieve from a business standpoint? So it's translation from your business objectives into technological objectives. The second part is about the how. So when you've identified your challenges, identified your roadblocks, and then specifically identified what technology is preventing you to achieve the technological and business objectives, then the how part is still a thought process, a systematic way of tackling that problem. I always tell my clients and the people that I talk to, it's very much similar to a grade 10 lab report. Is now you have your definition of the problem, then you have to come up with your thought process, ergo the hypothesis. You bring forth what you think might work, and then you overlay it on top with your journey. It's about telling a story. So the eligibility aspects of it, there are different types of work. Obviously, like I said, in terms of TRL scale, there is the basic research. So you're acquiring scientific knowledge. And then you have the applied research, which is you have scientific knowledge, but then how do you apply it to a particular marketplace or particular technology sector? The experimental development is what I was referring to about a systematic investigation. This is extremely important. CRA oftentimes will question or would not question whether that is a technological problem that you're facing, but they could be challenging you in your approach to resolving those problems. And then obviously, then this last part is supporting work. Supporting work is essentially all the work that is essential and required for you to conduct that experiment that I'm alluding to in point number C. So as an example, so the three criteria that I often say is the technological uncertainty, systematic investigation, and technological advancement. So if I were to translate that into normal people talk, if I can call it that, is what knowledge that was missing. So what is the knowledge gap? Then what is the story? And at the end of it, what have you learned? Using an example over here, it's a very simple example of an accounting software. If you describe to CRA that you're developing an accounting software, then that is not eligible. But when you dive a little deeper and you look at, so there's a data exchange engine, there are different algorithms, there's performance criteria trying to meet, then you start getting into the crux of the technological angle of what you're trying to achieve. And at the bottom of that triangle over it, there's different supporting work like coding, building the UI and all that fun stuff. Like all the things, if you can demonstrate a direct linkage to facilitate that experiment, that you can include as part of the eligible work. On the right-hand side, I also want to point out that you could have multiple SRED projects within a business project. So oftentimes CRA would make the comment when they do an audit or review is that what you're describing is a business project. It's not a SRED project, meaning that there is you need to focus a SRED project on the technology aspects of things. So what that means is, as a business project, you're trying to achieve a business goal, but within that, there could be multiple different types of technological challenges you're trying to tackle. So in that particular cartoon diagram over there, you have like SRED Project 1, SRED Project 2. On the flip side, it could also be true where you have multiple business projects, but all of them are solving a same technological problem, meaning that you have the same SRED project that are interleaved with all the business project that you have. Perhaps the business project is a different client or a different customer and so on and so forth. So it's very important to be able to identify exactly the technological core of it and be able to articulate it properly to CRA. This is to talk about very briefly about what kind of activities and what kind of costs could be included in there. One of the aspects about supervision, technological oversight that I want to allude to is, generally speaking, CRA are allowing work that are directly engaged. So for someone who is like a project manager or a program manager, their involvement into a SRED project, while eligible, likely would be at a reduced percentage, subject to a time allocation aspect, which is a whole can of worms that I'm happy to talk a little bit more about when we have a chance. Common issues observed by CRA. So like the common pitfalls. So incomplete or incorrect forms. So those are the simple problems. And not just for SRED, but generally speaking on the corporate tax return. We've heard from CRA time after time, and we ask all the times, like, why is this particular project being picked up for review? And they would say, well, it's not really the SRED or that aspects, or maybe it's a SRED, but there could be a error in the corporate tax return that filed, and the CRA system flagged that as the automation detection system and say, well, so some human at CRA needs to look at the claim, and since they're looking at it, might as well review it. The 3 and 4, well, especially 3, it's a lack of supporting documentation in the review. Often CRA would say, we're not challenging you on the description you made in terms of claiming how challenging that work is, but they would say, show me the proof. Now, from a technology development standpoint, it could be your lab book, could be Monday, could be Asana, could be Git, could be Jira. But the important part is to provide some documentation, and the documentation could be needs to be captured not after the fact, but captured while the work is happening. So it also speaks to the rigor of your best practice when you carry out your work. The 5 is also quite often being challenged by CRA, is a lack of focus in work on technological advancements. So this is back to the comment about differentiating between a business project and a SRED project. So I talk quite a bit about SRED. So that would be the technological development bucket that we talked about. I'll spend a couple minutes to talk about several different areas, like the hiring and training and the different buckets to illustrate the point. In this particular case, I'm using examples of Ontario, but there are many different programs. There are not just in Ontario, but in other provinces as well. But these are the job type of grants. So they typically are segregated by the different number of employees your company have. So larger than 100 or lower than 100. So there are upwards to 50. For example, in over 100 employees, there could be 50% support, 50% cost support up to $10,000, and they would also fund materials and travel. Usually, that percentage of coverage is higher for companies who are smaller in size. So just to facilitate, to help out companies who are small businesses, to help them grow. Other type of hiring programs quite often facilitated by MyTax. So in this particular case, MyTax could be funding very highly skilled academic resources that I want to transition from academics to company employment. So that could be a master's student or a PhD student. That could be investments from MyTax for the first couple of months of that onboarding of that employee. There are digital tech internships, youth employment. One other thing that I do want to point out, it's quite often overlooked. It's a very attractive and very generous cooperative education tax credit. You could claim up to 30% capped at $12,000. So that's roughly about what about $4,000 to $6,000 per employee. If you can find and qualify your company to participate in the cooperative program, that is quite supported by the various different universities and colleges across Ontario. Can export. So depending on your company's trajectory, once you have gotten to the point where you could start engaging in overseas businesses and you want to expand your reach outside of Canadian borders, Can Export, as an example, it doesn't have to be Can Export, it's the only one, could fund your work, grant covering up to 75% of the project cost that involve direct contacts, marketing, and so forth. The interesting thing I do want to point out that the main 4 areas that I'm listed over here are not technologically related, meaning that the Can Export programs, while it being a Canadian funding vehicle, does not overlap in activities with SRED, meaning that you could still be conducting your R&D and get the SRED funding and getting the Can Export. If you divide up your cost in accounting books and also in your documentation properly, they could coexist without grind down for one another. So what else? So there are many different types of programs. For example, there could be solar cell or renewable energy grants. There could be manufacturing and processing grants. So it's important to know your company and know the activities that you're working with, and with the lens of that to match with different government programs. The other aspects I want to put in is cash flow and risk level, and do a honest assessment of your own organization to get a better understanding of grant or incentive, which would play a bigger part in your funding journey. The last but not least is about best practices. So you would notice in many of the different programs ask for some kind of documentation of evidence. So having a good best practice in recording your work, not just for granted incentive, if I might add. If you have a IP portfolio that you want to chase after as you're going through a development, having a best practice in terms of documentation and tracking your work is tremendously helpful. Towards the very end, I think I want to also describe the different kinds of potential services that you may need as you grow from a startup to growing to manufacturing to maturing in the next stage. I very briefly touch base on valuation, but I'm an engineer myself. I pretend to know what I'm talking about when it comes to finances. So there's corporate finance, bookkeeping, and different types. As you grow, you should be as an entrepreneur think about how to piece everything together to make sure that you transition, you navigate that trajectory and S-curve properly without too much headache. I talk a lot and I talk fast. I think I blew through all the slides in about what 15 minutes over here. So I will leave you one last comment. As an engineer myself, I'm very, very passionate about fostering research and innovation to challenge the boundaries of technological possibilities. I take it very seriously in terms of it's my goal, my North Star to help companies to grow, especially to help motivate people to do more research and innovation and grow our IP and intellectual economy in Canada. So with that being said, I think I'll open the floor for different questions.
Great. Thank you so much, Jackson, for that. There are a couple of questions in the chat.
Oh, yes.
So we can begin with that. There's a question. Femina is asking, does software licensing, cloud service costs, etc., qualify as materials?
Very good question. So I'll explain. So generally speaking, no. But I'll comment a little bit depending on the nature of those costs. It may or may not be applicable in your particular scenario. I'll give you an example that if your company is doing development that required licensing to access certain type of data. Again, I'm making an example of, let's say if your development work requires data to build a statistical model to fine tune the algorithm, then the consumption of that data, it's part of your experimental journey. Then you can build a case to include that as being either material consumed or transformed. Probably not transformed, but consumed in the process. But generally speaking, if you are referring to software licenses to access Microsoft Word, as a dumb example, then that would not qualify as part of the eligible cost incurred into the SRED process.
Right, perfect. Thank you.
No problem.
All right, there's another question. If we used 100K VC or angel funding to pay for R&D to build either prototype MVP, and we had CCPC status, would we get the 66K tax return?
Sorry, the initial part was the, so it depends on the funding source. So, and also depending on the investor. Let's say if the investors comes from a company, it comes down to the cap table or the ownership split between the different owners. Now, it gets a little bit more complicated than that when it comes to CCPC status determination. There are a few things that comes into play. First is your company ownership split. So if you can still maintain, let's say there are in the previous example that I have, if I scroll all the way back to the top. Might be easier if I use that slide as an example. Right here. So if I use this particular as an example, if Sally and John are both Canadians, if the investor is also Canadian, then you don't have a CCPC challenge issue. Your company would still be Canadian-owned private corporation. Now that determination is ingrained in the aspects of the investor also being a CCPC company, for example, or your investor is a Canadian person. Then your control of the company is a separate question, but your CCPC status will be maintained. Having said that, if the investor is a public company, then you would lose CCPC status in this particular example. Or if there are foreign investors, then you would also lose CCPC status. So I think the nature of that funding and in what exchange, how it impact your corporate ownership structure would play an important part in determining a CCPC status. Now, I'll comment a little bit in additional is the more advanced version of that CCPC determination criteria is by looking at voting rights. So CCPC refers to, by the way, it's Canadian control, not Canadian ownership. So you could potentially structure your ownership in such a way that certain people have the voting rights. More specifically, CRA quite often look at the voting rights for people that could, for owners that have the right to vote someone into the board of the company. So what that means is that you may be owned by a foreign entity or a public entity, but the only Canadian owners retain the right to control the company. So that is the de facto control challenge. So there are mechanisms that you build in, but you would want to build that in before you entertain that cash injection for the funding options to make sure you maintain a CCPC status.
Right, great. Thank you so much for such a detailed answer, Jackson.
No problem.
All right, let's see. Okay, another question. Does the Can Export grant apply to e-commerce that sell to international customers, example in the US?
It can be. So I'll quantify that a bit more. I'll scroll to that slide. Give me 1 second.
Sure. Right. So reverting back to the Can Export, the motivation is to increase sales outside of Canada. So there are certain types of costs. In this particular example, is direct contacts, like direct contact, marketing tools, and market research. So there's a lot of other costs that could go into making sales outside of Canada as part of that export journey. So it can be a yes. Maybe that the specific case of that cost incurred or the type of the expenses would make a determination. And also when you negotiate that with Can Export, they could give you a list of all the things that would, in your particular scenario, would be included as part of that contract. So I guess without knowing too much details in your particular scenario, I can tell you that it's possible that is included in that. But it would require a little bit more analysis to tell you definitively whether that is in or not. How does that sound? Great, thank you. So Lee, if you want to discuss this further, I can pass on Jackson's contact information and you can get more details regarding that.
Yeah. Talking to me is free, by the way. So.
All right. Okay. So Fred's asking, I am from Cameroonian nationality. Am I eligible?
Right. So nationality. So I think the question more, if I'm assuming this question is more about SRED. So when you're considering about your eligibility as a SRED contributor, if I think about from the perspective of CRA, what they really mostly care about is whether you're paying Canadian taxes. So for example, if you own the company and you're drawing salary and you issue yourself, the company issue a T4, then you're a Canadian taxpayer, then your contribution according to that T4 would be allowed into the SRED claim. And same would be as a contractor. If you have a BSN number that you're paying, GST and so forth, then from that perspective, it's fair game. What really important is to differentiate two things. One is whether a salaried employee or a contractor is paying Canadian taxes. That's one of the determining factor. The second determining factor is whether that work happened in Canada. There are minor exceptions of a portion of the work that can happen outside of Canada, but by and large, The program is to facilitate work to happen domestically in Canada. So yes, if you're from, even if a foreign nationality, so long as you're doing the work here, it could be.
All right, Fred, I hope that answers your question. Fred has another question. Is it possible to get your support for the technology development?
Sorry, I meant I missed that question. Can you repeat that? Sorry about that.
Sure. He's asking, is it possible to get your support for the technology development?
Get my support in terms of evaluating it, whether that is eligible. Is that the question?
Fred, do you want to unmute yourself and
Yeah, maybe I'll just clarify that.
share more context? Yeah. Sorry, Fred, do you want to unmute yourself and share more context regarding your question?
Well, if you like, you can always ping me, and I'm happy to chat with you to
Yeah, or can take it
yeah, I'm
offline
happy
as well.
to, because yeah, I'm happy to chat offline if you want to ping me and shoot me an email or call me.
Perfect, sounds good. Okay, just want to make sure I'm not missing any questions.
Yeah.
All right, yeah, so there's another question in the chat. Can the tech development R&D done by external overseas contractors qualify for SRED?
Short answer is no. So I think the program predominantly is to help facilitate the work happen in Canada. So there are two aspects of it, which we see quite often in the industry as tech practitioner, SRED practitioner. One aspect is for foreign contractors, which they're not. Money is paid outside of Canada, then that is a straight no, that is not eligible. Quite often also is that you have domestic company in Canada. Let's say there's a development house doing software development, and you contract them out. If the company, let's say you're contracting company A to do the work for you. This company A is a Canadian tax-paying company, but if they also hire people outside of Canada doing that work, the portion of the workforce or the cost that is performing the work outside of Canada, it's not eligible for SRED. So you have to make that differentiation of where that work actually happened.
Got it. Thank you.
Okay.
Okay, so another question is, we are looking for partners to do a pilot project. We have spent some time, around a year, and some money as well, not incorporated yet. Can we apply for SRED after we incorporate?
Right. So I'll talk about several different scenarios. First of all, if the partnership is at the personal level, sounds like this before the incorporation. Personal, as your single person taxpayer, you can also file for SRED at a lower rate of return, but the money is not completely lost. So one aspect is so yes, you can file for a SRED as a personal entity with CRA. The second complication, it sounds like you're referring to if you have already some of the money get paid, but you have incorporated after some of the work that carried out. So from a booking and incorporation standpoint, I think you should look at how to make sure that you include those costs and invoices into the corporate balance sheet when you incorporate. So the reason why I'm saying that there's a little bit of a grace period from a taxation standpoint, that you create a corporation, then you start incurring that cost as you go along. So it's involved more than just a technology piece, but also a taxation piece, which I'm happy to discuss you with in private if you're interested. But there are strategies and things that you can work it in that may help you to incorporate to recuperate some of that cost. But depends on how long of that collaboration that you have. Let's say if you have a collaboration of like 2 years, but you incorporate now, some of that costs are definitely out. So there's a time sensitivity of it.
Perfect, thank you. All right. Okay. Let's see.
Can I step in for one quick question?
Of course. Of course.
Of course.
Hi, this is Louis. So thank you so much, Fred, for your presentation. It's very helpful.
No problem.
Yeah, because I just came to Canada for less than 1 year, and
Okay.
I'm not a Canadian citizen. And some of my partners, because I come from Hong Kong, and then some of my co-founders they're Canadian, so that makes our situation more complicated. So just a quick question: is it possible that I can have a one-on-one like coffee chat or like consultation from you based on the presentation you just gave us?
Yeah, so you should be able to grab, well, I think Alina would be more than happy to share the copy of that slide. I think my contact information is up there, but I'll also scroll over there. But feel free, ping me. I'm happy to provide more specific feedback depending on your particular situation.
Sure, I appreciate that. Thank you so much.
Yeah, my email and phone number is right there, so feel free.
Sure.
Great. Thank you so much. Thank you, Jackson, for that.
No problem.
All right. Couple of more questions here in the chat. Can you talk about commissioners and collaborators? What's that? Linda is asking that question.
Do you mind clarifying a little bit more? I want to make sure that I answered properly. So the commission.
Yeah, Linda, can you?
Yeah,
sure. You have the previous slide where you mentioned about the export, the previous one that you just shared. And at the bottom of that, I saw collaborators, and please go to the commissioner or ask for collaboration. So I wonder what was that?
Sorry, which slide was it?
The slide that you shared about, well, it's because you have so many.
I'll scroll. You let me know. You let me know which one.
Okay. Don't you remember anything about that collaboration?
I will. Is it about the tax credit?
Probably what. So previous. Go next. Back. You go about two slides. Another one. That one. That one.
Oh,
it was grants and incentives. Yeah. The three points at the very end.
Right. So this is right. So maybe I'll take a step back. So think about CanExport from the lens that the government organization want to promote your expansion into another country, with the intention of bringing in foreign revenue into Canadian borders. So in this particular scenario, that is, if you have an international collaboration with another partner outside of Canada, so some of the partnership cost, now it could still be funneled into one of the buckets that are listed over the four scenario over there, but you could be making a partnership or collaboration with a company outside of Canada to facilitate your export. So what that means is you don't necessarily have to open up shop. Using US as an example, you don't necessarily have to open up shop in US to benefit from the CanExport program. You could be collaborating with a company in the US to facilitate your export effort.
Oh, see. This is for the collaboration. So the trade commissioners and collaboration that you said are the same things?
Yeah, they're all about engaging in another country's trade, in other countries' officials in making sure that you facilitate the export, or you have a particular international collaborator that you want to work with to facilitate your export.
I got it. Thank you so much.
No problem.
Thank you, Linda. That was a great question. Right, so Hamsharan has a question. Do you think I can apply for SRED if I'm the owner of the company who built the platform, but I am technically not on payroll?
Ooh, excellent question. The short answer is, as an owner, you're definitely eligible to file for SRED. Now there is a challenge is if you pay yourself as a contractor, that would not be eligible because you're considered to be non-arm's length. If you pay yourself as a T4 salary employees, the T4 salary portion definitely is part of the SRED eligible cost. If you pay yourself bonus as an owner, that would be challenging because in CRA's eyes, because you have control and ownership of the company, you can dictate how much bonus you pay yourself. So the short advice that I can give you is that making sure that you pay yourself.
Okay.
And
I don't actually pay myself because the company's not doing that well right now.
Right.
I've been actually working on it full time for the past year, and so like that's why I was wondering if I can claim that.
Right. So I think if I'm making a speculation, I think you're referring to like dividends or other type of that you could be paying yourself, whether that would be attributed to part of the SRED claim. Is that the question?
No, the question is if I'm building the software and I'm actually I'm not employed right now. I'm unemployed, but I'm actually working on it full time in terms of my startup. But like, I was wondering if I could actually claim any sort of money from that for SRED.
Right. So coming in from the angle where the SRED program is to help you recover the cost that you've already spent. In this scenario, it sounds like if you haven't, from a people cost perspective, right? So from a salary perspective, if there's no money exchanged, there's nothing for them to pay you for it.
Okay. Thank you. So I guess
No problem.
I claim it.
Now, maybe I'll comment a little bit. Sorry I'll quantify that statement a little bit more. There is a clause in SRED where you need to have the money exchanging hands within 6 months after the fiscal period for it to still qualify as SRED. So there are clients that I'm working with where they're not able to pay themselves throughout the year, but they're able to book a salary in your accounting bookkeeping and making sure that their money exchanged within 180 days after the fiscal period. So within that 6-month window, if they're money exchanging hands, you could still file for SRED to cover that portion of it. So it comes back to about the cash flow aspects. You might have to have a short period of time to have money exchange hands in order to recuperate that 65%. But generally speaking, there has to be cost incurred for CRA to pay you for that SRED.
Okay. So basically, if I was able to pay myself now, then you're saying like I can actually claim it on SRED?
Correct.
Okay, but
it has to be money exchanging hands.
Okay, but if it has to be through payroll, or does it have to be like, can I just like if I withdrew money from the bank to my bank, transfer it?
Right. So it has to go into the general ledger and your transaction record and you have to pay yourself money, and then also in from a bookkeeping standpoint, it has to be registered as a T4 salary, so you have to pay CPP and CI and all those things. So it's not just about money exchanging hands is the first step. Making sure that you go through all the check boxes. In qualifying the fact that you are paying yourself a salary is the second part of it.
Okay, thank you.
No problem.
Great, thank you. Richard, you have a question?
Yes, I do. Anyways, Jason, thanks for the presentation. I'll probably call you up tomorrow, and I'll probably give you a in-depth detail of what I'm doing to see whether or not I'm qualified for SRED. Additionally, whatever other programs available at a federal or a municipal level. But let's have that discussed tomorrow. But I wanted to ask today, what is the difference between the York U or Y-Space program versus the Govt Economic Development Program? With the Govt Economic Development Program, they're literally giving $5,000 as a grant for startups. So does Y-Space Markham have anything similar? That's number one. And number two, does Y-Space do you have to be a resident of Markham, Ontario?
All right, I'll quickly speak to that. So I think you're referring to the Markham Small Business Starter Grant. YSpace is York University's entrepreneurship hub. We don't give grants ourselves, but we have mentoring programs like the Founder Fundamentals that we offer to entrepreneurs. We do this in partnership with the City of Markham, and they have a starter grant similar to what you're referring to that the City of Vaughan does. If Serena's here, she can speak maybe and provide some more detail, but my understanding is that you
You
need to
have
be
to be
residing.
you have
Yeah,
to
you
be
have.
a Markham person to get the Markham grant, but each
Yeah,
city should have their own kind of funding, like
yeah,
similar.
but since you're in one, the one grant will apply to you. It's
Okay.
the same program, the starter company program. Different business centers around different cities offer it.
Can an applicant apply to the Markham Startup Grant and the Vaughan Economic Development
Yeah, but
Grant?
depending on where you live, if you don't live in Markham, then you won't get it.
Okay, I see what you're saying. Subject to your residence. So if
Yeah.
you're in the city of Vaughan, you gotta apply through Vaughan. If you're in the city
Yes,
of Markham,
exactly.
if you're a resident of
That's
city
what
of
I
Markham, then you gotta apply through Markham. Gotcha. Understood.
No problem.
Okay. No, that's
Great,
what I
Richard.
need to
I
know.
also
Thanks.
Perfect. I
Yeah.
also send you more information regarding that tomorrow.
Okay, cool. Got it. Thank you.
Perfect. We have a couple of more questions here. I'm loving the engagement. Edemola, you can unmute yourself. I see that you've also dropped in a message, a question in the chat, but yeah, go ahead, unmute yourself and ask the question.
Thanks, Alina. So I was just going to ask the question to Richard, if as a Canadian corporation, is it possible to actually apply for a grant where technology will be used outside of Canada? Say, for instance, I want to develop an app. It's like a telehealth app, and it's MVP stage, but it hasn't really gone into the market yet. So can we actually apply for a grant whereby we want to go into, for example, Brazil or some country in Africa?
Maybe I'll take a quick stab at it. I think that could be Alina, you might be able to chime in as well. But I think from that perspective, it sounds like the work in the app development in your example, it's happening in Canada. Then there could be several different grants could be at play. The target audience being outside of Canada is less of a criteria for other grants, so long as you're expanding the technology region development aid capability within the boundaries of Canada. So it sounds like the work is developing here, but your target audience could be not just Canada but outside. So there could be different grants at play. All of them might be addressing different kinds of the cost that you incur during the journey.
Fantastic. So just one quick follow-up question. So I was just going to say that in that scenario, so are you saying that one can actually apply for a grant, for example, the can export, because within market research, we also trying to expand, as well as applying for a different grant, maybe on the like the Canada innovation program, whereby it's specifically for a new market because they don't have such capabilities yet in those regions.
You could be. I think I'll highlight the aspects about the different programs could be funding different kind of expenses that you may have. The important part is to be able to directly link certain type of expenses to what activities and keep them separate and have the documentation to support the fact that they're separate in either in your technical documentation or in your accounting bookkeeping. And when the time comes, if any different agencies is coming to ask, to prove it to them that you're not double dipping, then you have both the accounting and technological and other types of documentation to support it. So it's the important part is to plan ahead, I think is what I'm trying to say.
Okay, fantastic. Thank you so much, Jackson. Thanks so much, Alina. Just one quick question, one quick last one. Sorry, guys. So say, for example, like we have an MVP one, it's actually working. And we also have some other capabilities that we want to bring out as maybe like an MVP2 or MVP3, would we still be able to apply for the same type of grant in the next fiscal year or not?
Right. So I'll comment a couple of different things. If we're talking about in the SRED aspects, so SRED, it's claimed yearly in the fiscal period, and quite typically what we advise companies to do is to identify a technology theme that could span multiple years. So in that sense, it's not really tied to the MVP, even though it's integral to the development work, obviously, but it's identifying the technology challenge or technology theme that would likely take multiple years for you to resolve. So in that case, yes, from a SRED perspective, you could be claiming the same quote unquote project through multiple years. The specificity of the work that carried out within the physical period would dictate the technical documentation and all that. So your submission could be the same project, but every year you describe the work a little differently because you do work on different things every year. So for, like you said, the MVP1, MVP2, so you could have different performance criteria, you have different specification. So describing that from a technology angle through SRED through multiple years is important and can be done. Quite often can be done. For the grant aspects, some grants have short period duration, like 6 to 12 months. Some other grants could be spanning 24 to 36 months. So IRAP, an example, could be like a 8 months to an 18-month or 24-month engagement that you have with NRC. Well, not NRC, but CIC right now. They just have that change very recently. But the point being, you could have a project that span multiple years or even span multiple fiscal period, but still fall under the same grant or tax incentive program.
Fantastic. Thank you so much.
No problem.
Great. Thank you. Before I ask Salome to ask his question, Temina has a question regarding are there tools available to navigate through the different funding options, or do most entrepreneurs enlist a consultant?
Oh, that's a very good question. So I'll put on different hats for a second. How about that? So generally speaking, many of the grants, actually I shouldn't say many, but all of the grants and incentives have to be enlisted into the database that you can go to the one that I showed you earlier. The Canada.ca website, part of the Canada.ca website. You could search for all of that. They are all readily available for you to find. The challenge is they're not very straightforward and they're not very descriptive. They're still likely, after you pull on the filter, you still have anywhere between 20 to 30 ones that you have to navigate through, and they're not at all very intuitive, daunting even sometimes. So on the one hand, yes, they are readily available for you to search. Just you have to put in a lot of research time. That is why consultants like myself come into play, where we synthesize that information in a way and we help companies to identify for that. This is not a sales call, but there are many different consultants who offer the extra layer of service to make your journey on navigating that much easier.
Terrific. Thank you, Jackson.
No problem.
Great. Salvamir, you can go ahead and ask your question.
Thank you. I guess wanted to on that previous question that was in the text that I had with regards to like the prototype that we did. So when we spent like a year plus on it, I guess it was more validation of the technology.
Okay.
And like I said, kind of trying to kind of get the next step, either incorporate, get funding, patent filing, etc. Right. So one of the other questions was any of the grants can be applied for a patent or costs related to patents.
Right. The short answer is yes, there are, but they are generally harder to come by. And the reason I'll explain why, because many of the patent application work are considered to be administrative. So you need to wrap that around a bigger technology program or technology initiative, and which would allow you to incorporate some of those costs into there. There are programs who would fund hundreds of thousands of dollars and would allow a certain portion of that cost to be on the administrative side. Like the high end of the IRED program is a good example. You know, the SIF grant, Strategic Innovation Fund, another example that you can possibly fold in some of those patent application costs into it. If you're looking at like a SRED program, for example, generally speaking, no, they would be considered to be quote unquote after the fact, that you have already demonstrated the experimental work to be feasible, or the cost incurred to file that pen does not directly impact the technological development itself. So there are the short and long answer of it, I guess.
Hey, Jackson, I have one question for you.
Sure thing, please.
Okay, in terms of SRED, can it be applicable to a co-op student that I have that's working on materials, video materials, research?
Very good question. Short answer is yes.
Yes.
So there are a little bit of a qualifier to that. So first is define properly about what the co-op student is doing. Quite often, what I advise companies to do is to tie the co-op student into a particular, it could be a charge code, or it could be a particular project. So define the project in such a way that the whole project is SRED eligible.
Yes.
And then, so on top of, so first claim for the co-op tax credit. That's like 12,000 or 6,000, whatever that may be, depending on how many months the person worked. And then that money, here's the kicker, does not get grind down in SRED. So you could double dip in that regard and maximize a lot of that. Now, the tricky part is about defining the project and make sure that you assign that person 100% to that project. So yes, it could be.
So basically, I run an addiction treatment, online mental health and addiction treatment startup. I'm trying to get that going, but then this co-op student is like in terms of her materials, her job is to create video materials in terms of research, different addiction topics, and try to create a 90-day plan for video materials for addiction treatment. And so that's why I was thinking, like, is it possible to qualify that as a project and get SRED funding? Because she's the only one I have on payroll right now.
I'll answer two different ways. I think first, I don't think I know the entire platform enough to provide you with definitive determination. Having said that, just by how you're describing it in terms of generating video content or other different types of content, does not sound like it's a direct linkage to the technological development. So it may not be. Hate to be the bearer of bad news.
Oh, no.
But I think what I'm trying to say though is flesh out the details about what that SRED project is. Then there could be another angle to say that is supporting work, because without that work, so the supporting work definition of supporting work is, think about the building blocks of a Lego. For you to be able to do such and such thing, which is SRED eligible in and of itself, other parts of the development need to happen for that to.
She has to do research and research stuff.
So there could be a potential of linking that as supporting work, but I'm just speculating here. I would not be able to provide you a definitive answer.
Thank you.
Yeah, no problem.
Great, thank you. I think we've caught up with all the questions in the chat. Are there any questions, any more queries?
No, thank you so much for the presentation, Jackson.
No problem at all. Happy to help. And if you have any particular questions that you want to iron out, I'm sure you can find and look for me. I'm happy to chat.
Perfect. Thank you so much for that, Jackson. I think we're all done with the questions, and that brings us to the end of the session. On behalf of YSpace and Markham Small Business Center, Jackson, thank you so much for the time and effort that you put into this session. It's always so great to host this workshop because you bring in so much value and so much information, and I really, really appreciate that. So thank you so much. I'm sure the attendees found it extremely beneficial. So yeah, once again, thank you, Jackson.